Another quick update. I'll keep this update short because, frankly, nothing much has happened in the last 2 weeks. So our markets continue to struggle. And by struggle, I mean the breadth of the market still remains very poor. There are just about 35% stocks that are above 200 DMA. It's very difficult in such conditions to find opportunities. It's a terribly frustrated phase also, because now what is happening is on the other side of spectrum, gold and silver has also stopped moving. So I guess in the last 6-7 months, you've seen a lot of people from equity market shifting to commodity market, something like gold and silver, and naturally so, because there was so much of movement happening. But now you are seeing, even post the trade deal announcement, this particular candle when it formed, I just updated on X that don't get too excited, because things underneath are very concentrated in terms of only some sectors are performing, and it's becoming incredibly difficult to identify opportunities. In fact, in the last month or so, the only space where I have invested and I had disclosed a couple of weeks back was the PSE and CPSE space, because this is a space which is trying to move up. Of course, it is not a trade. It is not a trade because in weak market breadth environment, such pullbacks are very common. So I have a review kind of a stop at this level. This is where I'll start reviewing the investment. Else I'll let it continue. So it is that kind of a market where you should be more inclined rather to pick up stocks or ETFs or whatever you like from at least 12 to 18 month point of view. It's not that kind of a market where you can simply come in and make trades and it immediately works in your favor. I don't think that is going to happen, and that is what is frustrating a lot of people. See, you have to understand, from mass psychology point of view, majority of demat accounts were opened, if you look at the data, between this period, September 20, to something like this period. This is where majority of demat accounts in India were open. So this is the trending phase that has been the norm for most of the people who have come in the market. Whereas if you have been in the market for a long period of time, then you would know that the norm for the market is actually what played out in these phases, where for multiple years market somewhat remains in a range and just doesn't move. Similar period, 2017, 2019, frustrating phase, and the market just does not go anywhere. If you again take this is again about 2 years market did not go anywhere. So we are just in that kind of a phase, and if you don't participate in these phases, you'll never catch such phases where the trend is smooth. So when the ultimate kind of movement will begin in the market, it is difficult to say. My base case is that from second quarter, that is post April, March, you should begin seeing strong movement in the market. That too, if there is no global accident. A global accident always seems to be around the corner because of the kind of geopolitics that is currently at display, the lack of maturity that is there in some of the powerful leaders who are there today, the total amount of disrespect such people have for other countries, their cultures, and those things are going to at some point in time disrupt markets, because there is a limit to which a nation can tolerate such nonsense, and that is what is happening at the geopolitics level. So you don't know what kind of prolonged period we are into. So 26 September was when Nifty 500 was at 26,200. Trade deal again 26,300. This is almost 17-18 months the market has not gone anywhere, and another 4-5 months we'll be somewhere close to July, August. It will be whole 2 years the market hasn't done anything. So this still looks like a very broad term kind of range or contraction, whatever you may call it, a bit deeper one. But you can see there is contraction forming on the chart. It's a bit complex also. In Nifty total market, Nifty 500, it is a much clearer one. But you can see what the market is trying to do. So these kind of contractions are difficult to kind of anticipate where and when these contractions will end, and which is where market breadth becomes extremely crucial, because usually you will see whenever number of stocks below 200 DMA reaches something like a 8 to 12% level, that is where you start seeing multi-year bottoms getting formed. Historically, that is what has happened. History doesn't have to repeat. It can rhyme. It can be somewhere 12-14% also. Currently, that level is hovering between 33% to 38%. Market keeps fluctuating in that range, and whatever stocks attempt to break out, after a couple of days, those stocks again come back lower. So it is a very challenging phase. So this is a chart of Nifty 50. I'll open up the chart of Nifty 500. Same story. We've been struggling at 50 DMA since July. These are many months where no kind of trending move is emerging in the market. And this has happened in the past. This is nothing new. This is a sideways kind of a consolidation that is happening. We have had in the past such phases also where for many months market does not go anywhere and it just keeps fluctuating sideways. Look at this. This is exactly what is happening. So, and this phase lasted for 2 years. So it's entirely possible. August, September, we keep fluctuating in this range. And one fine day, when the last man who's tracking the market gets really bored, then the market eventually starts to move. That is what usually happens. So if you now look at the market, what is doing well? It is the same names that we have discussed over the last 3-4 weeks. It is PSU banks, it is metals, it is banks, it is some bit of commodities, and of course, quite recently I started speaking about PSC and CPSC space because that is a space that can do well. Now, you cannot in such kind of markets chase something that has already deviated away from, let's say, a base or probably a moving average that you track. That is completely up to you. You will have to wait for retest of prior support levels or any other kind of indicator that you track. For instance, you look at PSU Bank. If I hold nothing in PSU Bank, would I be inclined to go ahead and start buying PSU banks right away? The answer would be no, because at an index level itself, there's a 10% deviation that has happened from 50 DMA. I would have much preferred taking entry here or maybe at this retest, not at 10%. So if you flip and take an example of metal, metal still remains strong. Let it come down. See, when the breadth of the market is poor, you will see such pullbacks happening even in stronger pockets of the market. And this is when you have to take advantage. You cannot chase anything in this market. There were a couple of spaces that were setting up. Defense is still setting up, but there is no clean breakout yet. This is one space that I really like from the next many years point of view. I truly believe defense and capital market are two pockets that can become our very own artificial intelligence kind of theme, a theme that continues to compound. But of course, you'll have to wait for the right kind of opportunities here. Even capital market is a bit flat. The breakout that you saw, it was just because of two stocks. So there are about 10-15 stocks that are there in capital markets. Only 2 of those stocks were attempting to break out. So again, what is the message? The breadth is poor. When breadth is poor, you will keep seeing such kind of pullbacks happening in the market. Apart from that, if you take a look at the broader market space, you take a look at small cap, you take a look at micro cap, small cap 50, mid cap, small cap 400, nothing is happening. And that is the reason why you are seeing relatively low participation in the market and people are just getting frustrated. There is a two-wheeler theme that is doing well in the auto stocks. Four-wheeler is not doing that well. So you'll have to segregate a bit. So this is a combination of Hero, Bajaj Auto, TVS Motor, Eicher Motors. These 4 stocks are really doing well. Insurance space is also having a decent kind of structure. There are 10 stocks in this, you can see. These are custom indices that I've made just to track the market a bit better. Apart from that, yes, this is the four-wheeler space. You can see, again, the structures are not great currently. The rare earth space has come back to 50 DMA. So again, if you use that logic, deviation 30% away from index, but again, coming back to 50 DMA. Let it form a base. But this is what you have to do if you're interested in still tracking equities. See, you have to understand that the small cap, micro cap space, the mid cap space is where money lies in the market. But because that space ran up so much between 21 and 24, even today, if you look at the compounded return of those pockets, it is still 25, 27%. In such scenarios, it becomes very difficult for such pockets to again set up so soon. So there is a cleanup that is happening in the market. And again, I keep repeating this. In the cleanup phase is where people run away. They just don't have the patience to track market because we are so wired as human beings in these times for instant gratification, instant reaction. We keep seeing this profit and loss statements by people. It makes us anxious. So you have to understand what kind of game you're playing, in which era. The game has completely changed over the last 10 years. Let no one tell you that the psychological part of being an investor in the market is same. No, it is not. 10 years back, the world was much cleaner. Stock markets were, relatively less reactive because there was limited information flow. Now, with the advent of AI, you get so much of fake news also. I won't be surprised someday when the market goes down 5, 10, 15% in a day just because some fake AI news comes in and it will clean up a lot of accounts. And then suddenly, it turns out that the news was false and markets again recover. These things you will see in this era. You cannot escape that. So times have changed. And I think for those people who have come in between 2021 and 2024, this is a harsh lesson that market is teaching. Of course, that lesson wouldn't be complete mainly because gold and silver in between started running so much, and I'm sure a lot of people would have chased those assets. But in general, equities, you take a look at ETFs, you take a look at stocks. I think there is more consolidation, more frustration left in the market. Valuation can be one reason, earnings can be another reason, people blaming the system can be another reason. That is fine. You can find a number of reasons. But the truth is that the price action is also just about flat. Top 500 stocks are not going anywhere. You should actually track the Nifty 100 and Nifty 200 index. Why? I'll tell you. Along with the Nifty FPI index, which is nothing but, this is a new index that basically tracks where FPIs have made investment, top 150 stocks. You should, because this will directly tell you whether FIIs, FPIs are again getting interested in the market. And look at the structure of this index. There is just no structure. Even after the trade deal was announced and price had a bump up, again, we are back. It's quite possible the gap will also get filled. I think in Nifty, the gap has already been filled. So this tells you very clearly that at the moment, there is no interest and there is no momentum. And markets in the short term, that is price, is a function of sentiment into, if you want to put it, momentum. Once momentum starts coming in, that is when people seriously start getting interested in the market. That is just how it is. Because everybody has limited capital and people want movement. So FPI index tells you there is just no movement, there's no interest from FIIs. Take a look at FII favorite stocks in the banking sector also. Remove PSU banks, Bank Nifty would be nowhere where it is today because the entire Bank Nifty move has been led by PSU banks. HDFC, Kotak and Axis and ICICI to a large extent have been flat if you look at the last 2-3 odd years. So that is what is happening. You have to track Nifty 100, 200 to see if something is moving because any FII, FPI who comes to the market does not directly go to the mid-cap, small-cap 400 pocket. He'll first try and explore what is there in the top 50, top 100, top 200 kind of companies. If there is no movement happening here, then it becomes difficult. It becomes seriously difficult to attract more money in the market. There are so many themes that are doing well. I also spoke about the US market. The US market looks tired. It's not bearish as such, but it is definitely a lot more tired. You take a look at NASDAQ index, which is the heart of the world today. If NASDAQ corrects, there is no market in the world that will survive. NASDAQ is also flat, consolidating a lot closer to 50 DMA. It seems like majority of world markets are waiting for something. Not every market is doing this. I think if you check the KOSPI index, I think KOSPI index itself this year is doing very well. Look at it. Just look at the contraction at 50 DMA. Just look at it. I think the Taiwanese stock market is also doing very well. Look at it. Again, a contraction, similar structure. So why would a FII come to India, where India is doing this? So India is facing a lot of problems. First, there is no interest. There is no momentum. I wish there was something done during the budget for investors. Foreign investors also, give them a clear-cut message. Please come and participate. Give them more tax incentive like a lot of countries do. So something should have been done to revive the market because market in itself is a great tool to aid in a country's progress. And I think our governments, whether it was the past government or the current government, they need to learn this, how to use stock market for overall progress and development of the country. So that's about it. A lackluster phase in the market. This is unlikely to go away so soon. It's a frustrating phase. Handful of pockets like metals, commodities, banks, PSU banks, CPSC, PSC is performing. I don't know what the structure of gold is today. Let me just open up the chart of gold also. This is silver. So silver at 50 DMA still seems to have some bit of time correction consolidation left. I don't know what gold is doing. Okay, gold is also above 50 DMA. Again, this range. So some kind of range movement. So it seems the world market is also waiting for something, some trigger. Geopolitics is not great. Every day you're hearing about something happening in US, Iran, and those kind of things. So it's a difficult environment. It is what it is. You cannot wish anything on the market. The market shows what it is currently doing, and you simply have to follow. That is the job of investors. Make sure you use volatility to accumulate ETFs. Any sector ETF you like or any market ETF you like. For instance, if something happens between the US and Iran, and Nifty again comes back here or corrects sharply, make sure you're using ETFs along the way to accumulate. Don't let go of this opportunity. Everything is not about BTST. Everything is not about taking a short-term punt in the market or 6-month kind of trades. No, think a little bit long term. The more volatility you get in the market, closer to the support levels, make sure you add something here. Let's say this support level also breaches, mark out where are the next support zones in the market. Another one, add another 20, 30, 40% here. If something really worse happens and Nifty comes down here, double up your positions, because these are long-term ETF positions that you're not going to sell in the next many years. Take advantage of volatility. Even in the short term, if you see 7-8% correction, start deploying something in your long-term investment portfolio, because that is nothing but an opportunity. India has a super macro structure currently. Yes, the markets are not doing well. I completely understand. It's a very frustrating phase, but it is how it is, and you have to adapt to changing times. All right. So comment section today is open. You can leave your query, and I'll try my best to answer all of the comments that come in. So have a great weekend ahead. Thank you again for coming back every week and watching the videos, especially during phases where I was keeping comment section closed, because it becomes a bit difficult, to take out time for other things as well. Take care, guys, and be safe.